Good morning, StockTwits Nation. It is Thursday, August 7th. This is the Daily Rip Live. I'm Katy Perry. As you can see, we've got a full house today. I'm here with Shay Boloor, as always, and special guest Paul Sciarra, the executive chairman of Joby Aviation, the company's first outside investor. We got some big news to go over with Paul. And of course, our friend Evan Medeiros, a popular and familiar and friendly face in the StockTwits community. Everyone, a good morning. Welcome to the show. How's everyone doing this morning?
Good. Market's
right.
green, so smiles all around.
Yeah. Paul, are you in Santa Cruz? Are you on the East Coast for this week?
I am on the West Coast. We just wrapped
Okay.
up our earnings call yesterday, so
Okay.
I've been busy over there.
Good
But I want
morning.
to say from the outset, Katy, Shay, Evan, thank you so much for having me on.
We're so excited to have you. I also see that West Coast sunshine just beaming on your face. It's a lovely shot. Evan, I haven't seen you in a couple weeks. What's new in your corner of the world?
Couple of weeks enjoying the rest of summer. It feels like it's already almost out the door.
I
up
know.
here.
I wore a jacket today.
Ooh,
I
that fall
know.
weather's nice. But yeah, excited to be back here. Excited to hear, honestly, from Paul in this first half hour.
Okay, amazing. Well, this is how we're going to roll today. If you guys have been following Paul's team, Joby, some big news this week. They obviously had earnings. We are going to go over that. So we're going to do a little deep dive with Paul while we have him here, and then bring Evan back on in to discuss general market news and trends and what's going on. Obviously, it's a big earnings week, but let's kick off with Paul. I know Joby is very, very popular in the community. It's a space that people are interested in. We were just talking before the show how I wish I had a ride to work today and didn't have to go on the 6 train. But Paul, busy quarter for you guys. You kicked off final assembly for the FAA flight testing, completed commercial readiness flights in Dubai. You had the Blade acquisition, which I think a lot of people in New York were buzzing about. Were there any surprises or milestones that stood out this earnings call? What would you specifically call out as important to pay attention to for retail investors?
Yeah, so it really was a busy quarter, guys. This was sort of like an all cylinders quarter across everything that really matters for our business, whether that's the certification of the aircraft, the production of the vehicle, or commercialization. And I think you saw that on display with some of the announcements that you mentioned. So we started to put into final assembly the first conforming aircraft, which will be flown by FAA test pilots later this year. And that's kind of the last leg of certification that begins to unlock commercial opportunities for us. Second, we announced a number of commercial partnerships. So a distribution relationship with a company called ALJ in Saudi Arabia, a defense partnership with L3 Harris to do hybrid autonomous versions of our aircraft for defense applications. And then importantly, as you mentioned, Katy, the acquisition of the Blade short-haul helicopter business, which is really the sort of the sort of base of what commercialization is going to look like for us. It gives us the routes, the customers, the takeoff and landing infrastructure from day one to really begin to scale the service in New York, in Europe, and a number of other markets around the world.
I want to ask, the shots that we're just showing are beautiful. I know we mentioned at the top, you're the first outside investor. This looks like something that is so futuristic and far-fetched. If you saw it in the slide, I'm curious, what did you hear in that first meeting, or what kind of piqued your interest where you were like, yeah, I'm going in?
So look, I got to know the Joby team almost, more than a decade ago. So if you think it's futuristic now, it was really futuristic back then. And at this point, the company was sort of 5 people, and JB, the founder and CEO, is sort of backyard. I think what I saw then is sort of what I think the market is starting to appreciate now, which is this transition from combustion engines to electric motors really unlocks something fundamental in aircraft design. It lets you build new aircraft with different capabilities that simply weren't possible with big combustion engines that just get bigger and more efficient. So we really started with that premise of rethinking kind of what an aircraft could be and what sort of performance targets it could hit. And it's really exciting, frankly, to see competitors, the rest of the market kind of appreciate now, 10 years later, what I think we saw in that early period.
Hey, Paul, first off, congrats on the success of Joby. I think Joby is close to an all-time high, if not that. It's just catching a major bid this year. I've been a big fan of the eVTOL space for a while. I've always said that the real money in that space isn't the flashy demos, but it's plugging in the real-world systems that have that budget, demand, and sense of urgency. And I do believe that the acquisition of Blade makes perfect sense for what Joby's vision is, and it unlocks a massive TAM because Joby has always been or always wanted to be this full stack operator. That's what makes them very unique against like the Archers of the world. I call them the Tesla of the skies because they want to own that full stack operations. And the problem has been that without the infrastructure, without like customer access or real world data, you're kind of a lot of these eVTOL companies are burning capital just to stay airborne. I do believe that Blade changes that because it gives Joby this instant foothold in a revenue generating operation and also a lot of brand equity in major urban markets. And most importantly, probably a front row seat to how logistics are happening at a rapid commercial pace. Like, how did you guys come up, get this acquisition through the finish line? Like, I think it was a slam dunk acquisition. I'm shocked that you guys are able, not, I want to say steal their assets, but like, what a merger. It's incredible.
Yeah. So look, I think you're right that to sort of deploy commercial service, it starts with the aircraft, but you need a lot of other pieces. You need the operations, you need the infrastructure, you need the routes, and you need the customers. And we've been sort of methodically building this both ourselves and in conjunction with partners for a very long time. When it comes to things like customer acquisition, we have had a large investment and a deep relationship with the folks at Uber. And Joby flights will be available on the Uber application from day one. That's about first and last mile transportation to your flight. And that's also importantly, Shay, about questions around customer acquisition. Like, how can we make this as available as possible? But you're right that Blade certainly supercharges that effort because we have a built-in base, we have built-in brand equity, and we have sort of built-in routes that people are already demonstrating a high willingness to pay in order to save time. So we were super excited to kind of be able to make that happen. And if you think about the history, look, we've known Rob and the Blade team, again, kind of going on probably 10 years now. I remember flying with Rob in a Blade from Santa Monica Airport out to Palm Springs for a conference. And what he told me then, which I think he still believes now, is that one of the biggest impediments to building out that business is the aircraft that they're using. Helicopters are too expensive, they're too noisy, so you can't land where you want to go. You can't fly with the highest sort of tempo operations that makes for a more useful service for end consumers. And we have an opportunity with our aircraft to address both of those issues head on from day one. And we think that's an opportunity to massively expand the TAM that a business like Blade has historically been able to go after. But I do want to touch on one thing, Shay. Look, we always have approached our business model in a multifaceted way. We do believe that vertically integrated, wholly owned, wholly operated is the right way to commercialize in certain markets. But we have always been open to sales, leases to JVs with partners, and importantly, defense, which really looks like aircraft sales as well. So this has been a core tenet of the business going on at least 7 years since we started our engagements with the DoD.
I'm glad you brought that up, Paul, because I'm very bullish on the new age of defense, and part of that theme is what's happening above. I know you guys don't get a lot of attention on the defense front because you guys are doing so much in the other part of the stack, but you guys are a defense operator at the same time as like the Archers out there. Have you noticed any kind of behavioral change on the government side on JVs post-Trump presidency, that they're being more willing to take the investments towards like these new secular growth themes that are inevitable, maybe not right now, but eventually the world is heading towards that way? They want to fund it ASAP.
Yeah, so I appreciate you sort of calling out the work that we've done in defense, because it's not something that's new for us. We started those engagements, as I said, almost 7 years ago. Joby is to date the only company that has actually delivered aircraft to DoD customers at DoD facilities, the only company that has trained DoD pilots on how to fly the aircraft, and the only company that has demonstrated longer range hybridization of the vehicle with a hydrogen fuel cell version of the aircraft that we flew for almost 561 miles last summer. So we have continued, I think, to kind of take the next step in commercialization with DoD customers with our recently announced partnership with L3. So we're bringing the platform and the vehicle level autonomy, and they're bringing the sensors, the payload, the use cases, because they work with these customers every day, and also the synchronization of this new asset with other assets in the field. And to your point, look, I think it's a time of reflection for many of these DoD branches about what the future of low altitude aviation looks like. I think conflicts around the world recently have suggested that that future is probably not $30–40 million crewed helicopters, but is something that is cheaper, something that is faster, something that is more flexible in its payloads. And I think we've got an opportunity to deliver a proven platform with an incredible partner against very important use cases like contested logistics, counter UAS, and even areas like electronic warfare.
One more question from me before I pass it to Katie. You guys have had some incredible partnerships right from the get-go. Like mentioned Uber, Toyota has been a major thought partner for you guys from the beginning. How has these major companies accelerated the point A to point B of where your progress has been on trying to get to that commercial front?
Yeah, so we've been, I think, sort of pretty methodical in terms of how we build out the partner set that we've been going to. Although, when you're doing something really ambitious, it's probably smart not to do it alone. And our partners are sort of unique in the category, and not only being partners, but in almost all cases, significant investors in the company. Folks that are sort of like with us and, have their shoulder to the wheel and frankly, financial outcomes tied to our success. So Uber is one of those. So as I mentioned, Joby flights will be available on the Uber application from day one. We will use Uber for the first and last mile transportation to our flights in markets around the world. Another important partner are the folks at Delta. So we are working with them on infrastructure, like for Katie, I suppose, at places like LaGuardia and JFK. And Shay also, we're not forgetting LAX. That's happening too. Delta has a big presence.
Me first, though.
And we think about, look, how can we combine our aircraft for the to and from your home to airport with your commercial flight and make that journey as seamless as possible. And if you can kind of one-click book both your commercial flight and getting to and from the airport or to and from your final destination via Joby, we think that's a great customer experience and something that delivers real value for customers, whether they're Joby customers or whether they're Delta customers. You mentioned Toyota, Shay. Toyota has invested, more than $1 billion in the company at this point in time, and they are a close partner on manufacturing. And frankly, we couldn't ask for a better one. There is no company in the world that is better at building complicated, regulated hardware at scale. And this isn't, just a sort of partnership in name. There have been Toyota engineers shoulder to shoulder with our engineers on the manufacturing floor for going on 4 years now. As we think about the next important challenge for the company, which is really about how we scale production, we think that is going to be importantly tied to our relationship with Toyota. As we're moving production lines now from our existing manufacturing facility in Marina to our new manufacturing facility in Dayton, Toyota is helping us figure out how to optimize those lines, change production processes, reduce labor cost, increase efficiency. And they're doing that with a deep wealth of knowledge of having done that successfully for more than 100 years.
Well, I'm glad we touched on partnerships because not only from like logistics and obviously bringing this ambitious vision to life, it's good to have, as you said, thought partners, co-creators, also on the side of just awareness for your company and the stock. Seems like, aligning with an Uber, a Delta, Toyota, known for safety, for example, is good social proof. And we talk a lot on this show about sort of this intersection between marketing and the brand of a stock and the ticker brand that are built. And I think Joby is one that the StockTwits community has been quite interested in. They're very enthusiastic. I think you have people that it's one of those things where like people are like, gosh, I would love to experience that myself someday, similar to a Waymo. How do you think about, bringing this, growing this company, scaling this company? You just came off your earnings call, planning to communicate to your institutional investors and your analysts on one hand, and then people like me on the other who interested in you guys because frankly, I would love a lift to the office. What is your mindset in terms of engaging people like the viewers here today?
Yeah, so I'd say a few things. Look, seeing is believing for something like this. Renderings, static photos, like it's better to see it in real life. And especially given the low noise profile, it's even better to sort of hear it in real life. So we made a concerted effort, guys, to kind of take the aircraft around the world and give people an opportunity to see it fly, to hear how quiet it is. And we're going to continue to do that as we build closer and closer to certification. Just some of the places that we've already done demos are Japan, South Korea, Dubai. We actually did one in Lower Manhattan going back 1.5 years now. You can see the photos on our website kind of around the Statue of Liberty. And the reason for doing that is to sort of give people an opportunity to experience the future early. I think one of the things that we're also thinking about now is, look, how can we invite folks that have been enthusiasts of the company that sort of want this in their market to our facilities to see production, to see flight test. So I think you're going to hear some more about how we're really trying to engage the community. That, look, I don't want to throw anyone under the bus, but some of these folks on Reddit and Twitter are doing better analysis and due diligence than many of the analysts that cover us. And we'd love to give those folks a front row seat to the work that we're doing, because building supporters in every community around the world is going to be critical to our long-term success.
Love it. I saw Shay light up when you said that. That was the personal point of pride for Shay. He has great takes. And for listeners at home, now you heard it. Put a baller analysis of Joby on Reddit, tag it, and maybe you will get a front row seat. I love it. It's sort of like the Robin Hood playbook. Paul, thank you so much. I know you've had a busy 48 hours. Congrats on the acquisition, on the earnings. We hope you'll come back next time you have an update, and hopefully, Shay and I'll be zipping around in these things soon.
Katie, Shay, thank you so much for having me. Really appreciate it. Hope I get to see you guys soon too.
Thanks, Paul.
Yeah. Thanks, Paul.
Bye.
All right, guys, we're going to bring back Evan. And while Evan is popping back in, we got a quick ad from our friends at Gemini. Investing in Bitcoin has never been easier. With the Gemini credit card, you can earn Bitcoin back on everyday purchases, gas, dining, groceries, whatever you're spending your money on these days. And there's no annual fee. And you can sign up today at gemini.com/cryptotwits for a $200 Bitcoin bonus. Terms apply. Again, the Gemini card, invest as you spend. This is issued by WebBank, and you can see rates and fees for more details. And you can sign up today for that $200 intro Bitcoin bonus when you spend $3,000 in the first 90 days. Promotional terms do apply. The Gemini credit card is issued again by WebBank. Gemini.com/cryptotwits to check that out. See rates and fees. All right, let's bring in our bud Evan.
Hey,
What's up? What do you think of Joby, Evan? Would you hop in one of those?
Nice job. I mean, they're pretty badass looking though, huh?
So badass looking.
It makes me want one. Pretty local. Yeah, nice job with the interview.
Thank you.
We go from Paul Sciarra to this guy now that's going to talk about lines on a chart. We go from flying cars to like, now we got some technical analysis voodoo. But
we got something for everyone. The charts go hard, I will say. Sometimes Jake's here and he pulls up the charts and people are going nuts in the chat. So don't undersell yourself, Shay, what'd you think of, before we hop in with Evan, what'd you think of Paul's read of their earnings and the company overall? I had just learned recently that they were in the defense space.
Oh no, I knew they were for sure were in the defense space. I think first off, regarding their earnings, this is not a quarter to quarter story at all. It's so early in this theme that if you are selling it because of just the losses are wider than expected, like you're missing the whole spiel of why you should own Joby. And there's a duopoly in Joby and Archer. And I think that you are clearly seeing drones catch a lot of attention right now, and well deserved, because it's a rising thematic. You're seeing a lot of government, you're seeing the DoD just trying to scale drones really quickly, but not just that, they're expanding a lot of the entire category of uncrewed aerial systems. And a lot of that is the cargo transports, it's tactical mobility, it's a lot of mission critical things that eVTOLs can really capitalize on. And Archer and Joby have a duopoly in that space. And I think that they kind of are tackling two different segments of eVTOL. I like Archer because of the Anduril experience and Palantir correlation and Palantir correlation. It's much more defense pure, but doesn't mean that Joby's not a great option. Joby is truly, like I mentioned on a conversation with Paul, they're building the test of the sky. They're owning the whole end-to-end stack of becoming an eVTOL player. Anduril is, I mean, not Anduril, Archer is very specific on what they're trying to tackle, which is pure defense.
Yeah.
Joby's trying to do a lot more than that, not just defense. So I think both are really interesting plays. I will say, if you just look at the past 2 months, Joby's killing it. Archer's been kind of lagging a bit. So showing the ceiling is a little different on both names.
So not by scale, but is the analogous example like a Boeing, which does commercial and defense, and then like a Lockheed Martin, which is more pure defense? Is that a good way to think about it, or is it?
Totally.
Okay.
I think that's a great way of thinking about it. There's also obviously some risks in the Joby model because it's a lot more CapEx required.
Yeah.
It's a lot more, they have a lot more commercial headaches than Archer would have, but also that ceiling is way higher for Joby.
Yeah. I mean, it requires Gen Z to leave the house. So guys, if you want to see the stock do well, you're going to have to leave the house. You're going to have to, hit some field parties. I don't know, get off the video games. I sound like an old person right now because I am. Let's hop into market trends. As Shay mentioned earlier, we're in the green. There's the tariff news from yesterday. Big news on the chip front. Exemptions for people who are moving production over to the U.S. I saw Tim Cook gifted Trump with a golden Apple placard. Kind of looked like a participation trophy of sorts. I don't know what's going on. This is what we're doing now. I would accept gifts too, so that's lighting up the market a bit this morning. But Evan, let's go back in time a little bit. Let's go back about a week.
No, let me talk about the tariff thing yesterday because I want to say how much of a PR stunt yesterday was. It was no substance. Like they're essentially Apple's making the glass here, not the actual phones.
Yeah.
That's why Apple's catching a major bid. It's not going to have to hit their margins. It's something that's just headline driven. That's going to be a win-win for all, but it's really no substance. And I do believe that the markets, like when Trump said 100% tariff on semiconductors, that would have crushed this market a couple months ago. Yeah. But I think we're now believing that Trump's tariff blitz is just an opening act of another Art of the Deal rerun. And it's the world's worst kept secret. And you can feel it in the way the market is running this morning. The Scary Movie isn't scary the second time you watch it. You know what to expect. That's what's happening right now. Yeah, it's a parody.
It's a parody movie. Evan, I want to get your read on this, but real quick, when I saw the Apple news, I ran to go check Corning stock because I know that stock because that's from kind of where I'm from, Rochester. They're a glass manufacturer. And it looks like they're jumping up a bit. They have some deals with Apple, but I immediately went to like, who's making that glass? But Evan, what did you make of the tariff news yesterday? Do you agree with Shay? It was a lot of pomp and circumstance.
Yeah, I mean, this is the market environment and the times we live in, right? So I think it's kind of more of the same. And yeah, let the good times roll, right? Like, but yeah, so a couple of things on like the market, but back to just real quick, going back in time now to the Joby interview. Yeah. One thing that I think is remarkable is, yes, how early Joby still is, but yet, he's been on this ride and the company's been on this ride for 10 plus years, which is remarkable. Congrats to them for being in the spot they are in terms of market appreciation. But I also love the comment he made about the Reddit analysts, right? About like this, the retail crowd, right? The former dumb money, quote unquote, is now like getting their spotlights all around. And you're seeing the story just really kind of come across in all these different little talking. Like, I think it's great. I just think it's great.
Yeah.
Well, anecdotal evidence on that. Like, I was one of those people on Twitter just writing analysts 2 years ago. Like, I worked at W2. This is my side thing. Now I'm on the institution side. I think there's a trend that's happening where FinTwit is still so early. I think we all think that it's like a mature bubble. Yep. It's not. Like, a lot of people don't know that you can go on X for finance news still. Like, it's so freaking early, and there's a ton of runway.
Yeah,
I
there's a
thought
lot of runway.
yesterday, Shai, when you're talking about you and Daniel talking to Lisa Sue from AMD before their call, I was like, wow, that's amazing for them because obviously Daniel is like brilliant. You just bring a completely different perspective from being a creator in the community and understanding like what retail wants to see and hear. And I think that's such a benefit to companies to have access to people like you because in the past there weren't a lot of people sort of representing that side, and now you can sort of cover both.
Yeah, I'm the dumb money guru. So I like to.
They're like, Shy, is this gonna go off on Reddit? Tell us.
Well,
Uh,
I was tuning into the former MicroStrategy earnings call the other day, and they did the same thing where all of the Q&A at the end of the earnings call were like all my, like favorite podcasters and
mm,
FinTwit analysts that I've been watching talk about like
Mhm.
Bitcoin and all these things for years. And there was no suit and tie there from Morgan Stanley or whatever with a spreadsheet asking
mhm.
about, relatively irrelevant terms for the current market. And so it's great. Yeah, it's great.
Well, it's also because they all missed AI big
Mm,
time.
yeah.
Like institutions are paying the premium that retail didn't have to pay. And that is what's kind of driving this market up and up where like who's buying Palantir above $100? I'm telling you who, institutions, because you can't go to your high paying clients and say, "Oh, we have AI exposure," and not say you don't own Palantir. It's
Right.
like the most embarrassing thing, and that's why you're seeing them play catch up. And at a certain point, you're gonna ask, like, why am I paying your fees if you're just paying catch up when I can go to this Joe Schmo in his mom's basement, and he saw the vision before you did years before.
Yep. Yep.
A funny anecdote on that front. I have a financial advisor who does all my stuff. I like to talk about it and read about it, but I don't care to do it myself. Fun fact about me. But he recently saw a Bloomberg alert. Shy, I don't know if I told you this about one of our shows got like picked up somewhere. There was an alert about a stock, and then he was like, "Hey," he's like, "Give me a call. I'd love to hear what you thought about this company." I'm just like, I'm paying. You're supposed to be.
Wait, which
he's
company was it?
What am I
it
paying you
it was
for?
a firm. And he's a great dude. I think he wanted to just get my general insight, but I was like, that's funny. That's very full circle where he's like, wait, is this you? And I'm like, yeah. And he's like, oh, like, yeah, would love to hear, because we talked to the CFO.
Well, it feels very blockbuster Netflix like the
Yeah.
relationship. I don't know. It feels like we're disrupting a traditional space for sure.
Shy, you're trying to manage my portfolio and steal.
Give me your 3%.
He's
I'll take
great.
it.
Shout out to Seth. Seth's the real one. He's old school though. He'll send me like the market will be down a bit, and then I hope he's not watching this. And then like days later, he's like, "Here's how to think about it," and I'm like, "Dude, I know. Like, we're good.
I'm on
Thank
the
you."
ground floor.
Well, Evan, we're talking about retail interest. Let's talk about last week because heaviest volume sessions since the April lows.
Yeah.
What is kicking up all this dirt right now?
Yeah. So my background more on the technical kind of quantitative side of markets, and I love market structure and sentiment. And I think, there hasn't been a lot of interesting days, I guess, to put it in a nice way, over the past couple of months. I mean, we had the huge, drop in events and catalysts in, the first quarter of this year with tariffs and coming off that bottom. But then we've just kind of been meandering higher. And I think last week, right? This was after hours on, was it Meta and one of the other Mag 7 earnings, right? And the market opens up with new highs, some euphoria, heavy volume pouring through, sold it aggressively. And then we had that follow through sell day on Friday, right? And that to me, when you have kind of the big 3-month high volume, you've got expansion in range, you got the VIX popping off, right? You've got some emotion coming into the market, and those are good breadcrumbs and clues as to dollars changing hand, investors kind of weighing in on the current events of markets. And so those are important markers now. The opening bell last Thursday, and then I'd say the lows from Friday in my worldview, like just to kind of manage risk and think about. And I think the hilarious thing, or not hilarious if you're a bear in this market, but like the bears must be furious right now that they cannot break this market down. Like we are still just chugging. Like we had our 2-day event, everybody got a little hurt, beat up, punched, kind of kicked in the, and here we are again, just grinding higher, right? Like right back to usual. And so, right now, I just think it's still this summertime malaise. Markets are moving up. The pain trade is still to try and be involved in this market. And I think for me anyway, the big reference point lows would be Friday's lows, basically. And, there's more to say about the longer term trends, but they're all intact. Like, there's risks out there, but this market is still chugging.
Yeah, we've had when Jake was on and Shive talked about it. Like usually August is not a great month, so I feel like there's
No.
some people just like bracing for like, okay, what's gonna be the thing?
Yep.
Is that a foregone conclusion? Like I think we talk about it like it is because historically it has been, but like, is it a possibility that this just doesn't happen and this just keeps ripping?
Oh, yeah. I mean, totally. I mean, yeah. I mean, the whole seasonal thing, like, I mean, like, I get it. I pay attention to it. I am always a little leery when everyone's kind of like, well, August, this August is going to be a bad month. That's what it usually is. And, there are structural reasons for some of these things. Just, the way volumes work, the way options expire, like there are things that lend themselves to these phenomenon, but like, I still think price action rules all. And right now, convince me otherwise. It's like, show me that you actually want to break down, show me that there's sellers in this market. And, we got 2 days of it and they seem to be gone. So, again, doesn't mean there's not risks. It's still a frothy market, but it's a market that's rewarding risky behavior, right? I mean, I'll end with this little rant, but like, to be a responsible trader in the last 3 months, like anytime you wanted to take a stop or exit because you're conscientious of a downside move, you've been punished. I mean, you've lost money, right? Like you've cost yourself money because things just keep finding that bid. It is rewarding bad behavior, let's be clear, but it's the current behavior that's working. So that's what we got.
It's the way of the world right now. I'm just
Yeah.
scanning what's headlines coming in.
So,
Yeah.
sorry, I was just making a lot of moves right now in small
Yeah,
cap
Shy,
world.
sometimes you lock in and I'm like, I don't want to even interrupt what's going on, but I do want to know what's going on.
So, okay. So first off, I sold my red wire position because what happened? That was one of the worst earnings reports I've seen in quite some time.
Break it down, define worst.
Worst is let me bring up the actual numbers.
I'm not even familiar with Redwire.
Space infrastructure.
I call them the caterpillar of space. Essentially, when you're in space, they do all the nitty gritty of when you're up there to like refresh the refreshments that need to be had so you can continue operating. So Redwire, what's it even down right now? I don't know why it's catching a bid. That's crazy to me, but
it was down like 30 though, right?
Yeah. Okay. So it was down 30%. It's down 20% now. I don't know what's happening, but I think it's a really important case study for small cap investing. It happens all the time where a thesis doesn't just break, it breaks so violently. You have to ask yourself, what is happening right now? And it starts at the top. So their earnings report was just an absolute disaster. Revenue cratered 20% year over year to $62 million. They missed their estimates by $25 million. That's a huge gap. Huge. Adjusted EBITDA swung from $2 million of profit last year to now a $27 million loss. GAAP net loss, I think, also ballooned to almost $100 million. And perhaps the most damning of all of these numbers is they withdrew their full year EBITDA guidance, citing government contracting uncertainty. What was the CEO doing just 2 days ago? He was on Fox Business touting their latest and greatest deals, knowing this was the earnings report he was about to drop on everyone. That is not pumping the stock, but it's also pumping the stock. And you don't do that. That's poor corporate governance. And when those numbers that I just stated out are that ugly, you pre-announce. That's the name of the game. If you're a real company, real corporate governance, you pre-announce an ugly print like that. Not going Fox Business, national TV, 2 days before dropping this. That right there is red flag. I'm out. It doesn't matter how great your product is. Doesn't matter how great your niche is within a $2 trillion space economy. if I don't trust you, I can't invest in you. And in small cap world, it's all about the CEO and management. I made the reference, I think it was this week, where being a small cap investor is like your house is on fire right now. You're in the living room because you're unprofitable. You have to factor in solvency risk. The odds of you making it out the front door is actually pretty low because it's really tough to go small cap to mid cap. The only way you can make it out the front door when the house is on fire is if you have the right CEO or mom and dad that stays calm, shows you the pathway of getting to the front door in an honest and truthful way, not gaslighting you, misleading you, etc. You're going to burn in that house if you don't have the right parents guiding you to the front door. That's why CEOs matter. And I think Redwire CEO just told me everything I needed to know about where their priorities are. And I'm not going to be a victim to whatever they're trying to do right now. And I know they were a 2% position from a small cap portfolio, wasn't big. They were always a tier 2 space player compared to the ASTSs and Rocket Lab. I think that proved why portfolio sizing matters a ton as well. And I'm just like, all right, I'm forgetting about you. I'm done with you. Move on to the next. And that's kind of the small cap philosophy. Now they're going back down 24%. So I think this is a name that's going to be much lower.
I think this opens up a bigger conversation. I'd love to get Evan's take too, but Shay, like just hearing the psychology of you just getting out of a position is very interesting to me because like it's, you know, for you, your long-term is a trust thing. And there was some sort of line cross and you're like, I'm out, not even like waiting maybe for it to bounce. Like you took the losses, but I assume you've been in a bit. But
I've
like,
also
why not wait a little bit?
I've been in those boardrooms. That's why, like, I've been in those corporate strategy meetings. I know when they did what they did, there's a reason for it. It's controlling a narrative because things are really freaking ugly, and they're willing to sacrifice retail shares, etc. Like, just because I know what it's like, the conversation on the other side of the door, and I know if that's what they did, there's some more things that we don't really realize yet that's actually happening under the hood.
Evan, and then from you have a different style a little bit than Shay. What would cause you to just like throw your hands up like Shay did? Would it be something like a lack of trust, or would it be something you're seeing in the data itself?
No trust, no belief in anything. I mean, that's kind of just the
Trust no one. I like it.
Yeah, I mean, it's just the way I operate. I mean, look, I do have like a separate investment bucket that I suppose I occasionally wade in, but the thing is like, I mean, even listening to again Joby earlier, right? Like listening to him speak, I'm like, oh man, I love this like I'm so gullible in like wanting to just love all of the upside that like if I let myself emotionally kind of get attached to a story, I know that it would be very hard for me to get rid of it. And therefore I'm just hyper on the other side. I don't even, quite honestly, when it comes to trading for me, I don't even want to know what the heck that company does. It's a ticker. Like, keep it blind.
You're like a player.
No, I was gonna say, it sounds like your first serious girlfriend really hurt you, and you don't trust anyone anymore.
I walk. Yeah.
Incredible.
Tell us what stock burned you.
Yeah,
Who was your first girlfriend?
How much time do we have? How much time do we have? Yeah, I mean that's it. So it's a different way to live, because the only thing I care about is just protecting the downside and not it's just not getting burned, and then the upside takes care of itself. Like if I don't have to take out any positions, so like we talked about a few tickers last week, I don't think I own any of those or many of those anymore. They get a quick chance to kind of prove themselves to me. So that's again the hardcore kind of trading side.
I do want to add, like, I'm envious of that. I wish I had like a hit it and quit it type of mentality where like I feel betrayed when like a Redwire. I feel betrayed. Unity, I still own some Unity. I feel betrayed from the previous CEO. And now, even right now, the turnaround's ugly, but I could just invest in AppLovin if I was more of a technician, more of a, I didn't have that emotional component of my investing, which I'm trying to learn from.
Strays over there.
But no, it's a delicate balance. I'm learning. I'm too emotional. I'm learning to become less.
But
that
you
I,
gotta
I,
be for
no,
what you do, Shy, because you're in it for like a long time, and you're looking at like I think these are gonna fundamentally alter the landscape of
no,
business,
totally.
and so
But
it's a different, yeah.
I feel like Judd Apatow a little. It's like a rom-com the way my philosophy is.
no, you were passionate about that. I was going to interrupt that rant earlier, but
No, that
holy
was all,
moly,
people were
you're
going
talking about
nuts
the
in the
king of Reddit,
comments.
king of Reddit retail, like really laying down the law there on Redwire. I'm like, damn,
Yeah.
he is.
Yeah. I brought the red and red wire right there.
That,
100%.
Evan, you mentioned a couple of ones plays you brought up last time that you've since dropped. Which ones got the axe for you?
Oh, okay. Soundhound, I think, was one of the ones I highlighted last time. Let's see if I can pull this guy up real quick. If not, I'll get it here shortly. But yeah, I mean, again, it's kind of a technical setup, and honestly, in my world, like it's still kind of hanging in there a little bit, but it's got to work for me, and it's got to make sense on the model, and it's got to make sense on the price action relationship, that the psychology, the flows. I'm looking for things that are trading. I'm looking for holes over the next week to a month to 2 months, right? So much shorter than Shy, right? Like I'm not looking for the world changing. I'm looking for, can I get a good 30-40% run in a stock over the next month or so? And so, to be honest, I don't know exactly where, but I mean, it was somewhere entered in here in like this Monday zone. I think it was just under $11, and then it got the boot last week at under $11. So I think it was like a very small scratch, and it had a couple of chances to kind of push up. And in my world, it's like, okay, you've taken too long. There's other opportunity. There's other things working. Therefore, it's just time to move on. So again, that's kind of the way I would cycle through things. It's all just kind of price and volume based. And what I would love, like again, and Shai said he's envious of me. I'm envious of him because honestly, you know what I would really love, and maybe someone can make this, is like a brokerage account that you put money in, you buy a stock, and you cannot sell that stock for like a 3-year lockup. I know this is like the worst broker model because there's no fees, but like I would love to not be able to touch that position, because that is fundamentally the problem. If something's not working in like the next week or so, or it starts going down, I'm like, okay, there's 4,000 other stocks and opportunities I can like think about.
Well, I used to work at a brokerage app called Public, and I don't know if the feature still exists, but if you put something, there's like a long-term portfolio. So you can drag things for your long-term. And if you went to sell it, a thing would pop up and say, are you sure you want to sell this? This is in your long-term portfolio, as like a, hey, you might just be having a bad day over there, which was an interesting, like, I think positive gamification use case. Because obviously, I mean, companies would love if that app exists too. You're just like, you're in. But
You're in,
it's true.
yeah.
You might wake up and be like, oh, and do something.
Could,
So
could,
it's a
could
stop
you
suit.
could you just imagine though if that existed 2 years ago, and the amount of ups and downs we've had, the
Oh
yen
my
carry trade
God.
crisis, the tariff wars.
Right.
Yeah.
It'll be like, oh my God, I want to take it out, I'm stuck, and you throw your phone against the wall probably.
Yeah. I mean, it's like the people who sold off some of their 401ks in
But
April.
but it would benefit them. Like we're at all-time highs. Like
I
that's the
know.
thing. Like people got scared out of positions. Like when you see the headline on all these legacy TV channels, like, oh, everything's burning down, you're gonna sell and like go on the sidelines. But I don't
No, 100%.
get it in the long run.
It's
Yeah.
so much better investor aligned behavior. Like that little checkpoint of Public, that makes total sense to me, of like short circuiting just a little bit of that emotional response that could be coming through. But let's face it, yeah, stocks at all-time highs. You've been like there's no doubt in my mind, Soundhound, I'm gonna come back on the show in like a month and this sucker will be at like $40 and I'll be like, oh yeah, I sold it for 30-cent loss. Like
They always
No.
blow up after you break up, you know?
Yeah.
They start hitting the gym. It's like,
Well,
God damn it.
we got to talk about another company that I've held on for way too long,
Ooh,
emotionally
let's
attached to.
Okay.
It's up 31% this morning, and I'm glad I gave it its long leash. It's Jumia. JMIA is the
Okay.
ticker.
Wow,
They had
all these
an
names I've never heard of.
incredible earnings this morning. Incredible. So I haven't listened to CC yet, but looking at the top line number, this is, again, I hate using this phrase, but it's kind of accurate for Jumia. It's the Amazon of Africa. I know everyone says Amazon, blah, blah, blah. in Africa, it truly is like the only player that can do e-commerce there. You guys have no idea how much of the wild, wild west it is in Africa right now. Like there's no UPS, there's no FedEx. The only logistics way to order goods and services and get them delivered is through Jumia. And they've been penalized for since the COVID bubble. Look at that, $60. It was at a high and then went to $2. Very justified because again, during that time frame, it was all about top line growth. Who cares about profitability? And they also had a massive currency exchange issue. If you guys don't know, let's look it up. It's pretty ugly. But now things are kind of favoring out a bit. They got a new CEO. He ran the only not profitable but only successful division BU unit on Jumia during the COVID bubble. He became the CEO. And now in this earnings call, like they wanted, I think there's like no real coverage on the name as much as you'd want because I think a lot of people gave up on them, but you have to trust the management's guidance. So physical goods orders went up 28% year over year. Midpoint was 22%. Huge beat. GMV, gross merchandise value, went up 18%. Estimates 13%. EBITDA multiple would beat by 10%. They also said they're going to break even by Q4 of 2026. That right there is a huge, huge comment right there. That removes solvency risk, all solvency risk, because your management stuck their neck out, and this new CEO, he is an operator. He is not a BSer like some other CEO that we just talked about, or I talked about 5-10 minutes ago, that won on national TV as sandbag everyone. This guy is not that. He's truthful, he's honest, and that's probably why the stock hasn't performed as well as it could have past couple of years, because he doesn't BS. So now that we're seeing break even Q4 2026, full year profitability in 2027, and I think that there's a lot of momentum on Nigeria, which is they're going to be the bread and butter of Africa. That momentum is accelerating. The orders went up 25%. Total GMV for that region, I think, went up 35-40%. You're seeing their guidance their full year guidance is 2x, 9% estimates on GMV. They're coming at 18%. And they are going to be the major beneficiary on this China-US tariff debacle. Nobody really knows that yet. That is going to be, they're going to be the profitable middleman, because like, how is Jumia correlated with the US-China tariff? Well, Jumia is going to become the person that these China manufacturers and African consumers go to now, and that's going to be a tailwind, especially when this US-China tariff policy is not going away anytime soon. And I think that's being that broker between African consumers and Chinese manufacturers is actually a huge tailwind. And right now, the company's worth $500 million, $500 million. When I'm saying they're the go-to e-commerce presence in Africa, that's a highest growing e-commerce segment in the world because it's such a mess there. They deserve to get re-rated higher. And I think that this is a name that's going to run. I know it's burned a lot of people. It's burnt me. I'm still in it. I didn't get in 2021, 2022, but I got in at $3, saw it go up to $12, went back down to $2. Now it's at $6. I think this is a real move. So I'm holding on, but it's like my ex betrayed me. I'm getting back with my ex. That's what it sounds like.
I'm glad we're talking
like the pain.
Yeah, I think he does. Yeah,
I'm a masochist. Yeah,
right.
I'm glad we're talking about the African market, though, because that's like, we talk about emerging economies a lot, and I don't know why Africa doesn't come up. I dropped a link for a producer there, but like 9 out of 20 of the fastest growing economies worldwide are in Africa. The company is headquartered in Lagos, Nigeria. And I think for, a lot of people don't visit Africa. They don't follow this isn't, it's not, it's like when people visit Egypt and they're like, oh, it's not just the pyramids. Like it's an obvious statement that, there's massive cities, there's huge growth potential. And to your point, Shay, like when you say things are a mess, I don't think you mean that it's a mess there. Generally, I think you mean it doesn't have the setup logistically in terms of getting something from point A to point B that we have. So
it's a third world country. Like they're just trying to survive. They're not trying to enable like the benefits of other parts of the world. But yeah, but I think to your point, it's like there's opportunity there to get there, and there's appetite, and there's growth. There's real business growth. I know there was even it's a huge tech conference in Nigeria. I remember hearing about there's stuff happening there. So I think it's like, look under the hood and see there's like active startup culture. And I think that supports everything you're saying, Shay, of
just room to grow. And that's what you look for. If you have a business model that works, like you said, it's similar to akin to Amazon, and then you got a place where there's investment being made and growth. I think it's interesting, and I'm glad you brought those guys up because we don't touch on that region of the world very often.
Mhm. Yeah. No,
Um,
100%.
Evan, do you have any other fun setups for us, like the queues, or what do you have? I know you prepped some things. We got a few minutes left. I want to do dealer's choice over here. What is exciting you the most these days, other than your active stock dating lifestyle?
What's exciting me the most? So, I mean, what excites me the most is still like, again, from my investing and like my personal interest is still always kind of tunneled into Bitcoin treasury companies. I still like that space. It is technically where I become more of a shy, where I'm kind of where I truly understand kind of the big muscle movement blocks. I still don't know that I have anything too exciting in that space besides like long Bitcoin, which is kind of consensus. But I mean, in terms of technical setups, I could run through just a couple of very quick ones,
Let's
and
do it.
we'll go there. Again, these are all very much renting up, renting ideas, and Evan doesn't have much attachment to this, but
We could go all day with these dating. I'm just thinking like what app would the Tinder versus like, I don't know.
So and maybe this is in Shai's wheelhouse, and again, this is kind of what we leverage here. So this is Western Digital. It's just had a phenomenal move over the last couple of months. This is a monthly chart, so we're looking at a very long-term view, but basically for the last 10 years, Western Digital has gone absolutely nowhere. It's pretty much been range bound, and the stock is looking like it wants to start to break and move. And this is where, again, my philosophy is I rely on the Shais of the world to do the heavy work, to do the fundamental analysis, to listen to these conference calls, to understand that there's a company that is starting to accelerate earnings in some respect. The price actions will speak for itself. And then the little flies like me kind of just jump on and say like, okay, something's happening. Let's put some capital here. Right. So WDC, again, it's had a huge move. I'm watching it just kind of cool off right here, but I think it's interesting. Carvana, which again, massive move. I cannot believe, I just really can't fathom the bankruptcies of 2 years ago to all-time highs in the stock is remarkable. From a momentum standpoint, again, it's had a huge move, briefly touched all-time highs, starting to settle in. It just has my attention. I don't have a
Well,
position.
I don't believe like something's weird's happening with Carvana. I don't understand what it's
Please
like.
tell me, because like I
No, I
cannot believe it.
I don't know why it's trading at 80 times earnings when it's just a reseller marketplace. It's not. It's
Totally.
more than that, I guess.
Is it
but
getting memed, Shy? Is it?
It
is
is. It is
okay.
getting memed, but it's been getting memed since
Okay.
$5. I think. Well, what is it? It's like 100 bagger almost now.
Yeah, oh my
Uh,
God. Yeah, it's ridiculous.
It's nuts, and I think I get it. Like they've had a huge margin expansion that I didn't foresee. That's why I kind of don't believe the numbers as much. But they are somehow able to produce. I'm looking at right now 12% EBITDA margins while growing their top line 30%. I don't know how that's possible in their business segments, and I don't know how they're able to do that. Also, you have to factor in like it's not a scalable business model. They have 20% gross margin, so I think that's something's weird. Like you don't trade at 80 times earnings while having gross margins at 20%. Because usually when you have a high earnings multiple, it's due to a scalable product and you're printing cash. You're not doing that with Carvana. It's like something weird is happening. It's happening for years. And it's like I'm not participating. I'm not shorting the stock. I'm 100% getting along the stock, but some fudgeries is happening, and I don't know what yet.
Ooh.
Yeah,
Shy, you're on one today. I really this
I know.
is good. I like the end
It's
of the
earnings.
week.
It's
like,
earnings
yeah,
season. Earnings
let's
season. I
go.
love it.
I need something to be that excited about. Speaking of people on one, I just saw the Intel's taking a hit right now because for some reason Trump had a falling out with Lip Bhutan, who is the new CEO over there. If you're following the company, he just led some massive layoffs a few weeks ago, unrelated to the president's ire, I guess. I think he's accusing him of having too close ties to China. Maybe he didn't want to pop by the Oval Office. Maybe he didn't bring a plaque. I don't know. That's an interesting one to watch. I think, as always, there's a lot of words being flown around. It reminds me of when Jack Ma like disappeared for a bit over in China a little bit though. So that's interesting. Can't remember the last time the president called for someone to resign, but that's happening. We also have earnings. So Pinterest, who our guest previously earlier today is a co-founder of, they're reporting after the bell, a signal for the advertising market. We have Twilio, Peloton, talk about just a beaten down stock. And I think who else is a trade test after Bell too, Shy. And that's one you've been watching. Are you still in that one?
I'm not anymore. I
Okay.
liquidated that as well. Might bite me in the tushy, but I think that
Sounds like more of an amicable breakup though.
I'm not saying it's a bad business. I just don't think you can be a standalone ad tech player and have a premium multiple assigned to you anymore. After seeing like what Amazon's doing in the space, seeing what Meta's doing in the space, it's going to be tricky. I think Jeff Green is the only CEO who can maneuver that situation. It's just for me, I don't have high enough conviction in ad tech, and I just think that it's a little too noisy for me. So I took some cash out and I put it elsewhere.
Hey, you gotta focus your energy. I'm also seeing Celsius is up 23%, which seems crazy. Anyway, as always, lots going on. Evan, I'll give you the final word as you go into this next week. You mentioned at the top just August vibes. Where's your head at for next trading week?
Yeah, so for me, I'm gonna especially just be keying off of last Friday's lows. And again, I really don't trade a tremendous amount. I don't want to promote like super day trading or active trading because I do think, cool, calm, collected longer term is definitely the way to approach things. But I think Friday's lows is a good reference point for momentum and sentiment in the market. And as long as we're above Friday's lows, I think you're still looking at long setups. You're still participating in the circus and you're trying to just ride the wave, right? And September, everybody will be back pretty soon. Before we know it, volumes will pick up and we'll see how the market takes things. But above Friday's lows, I'm long. That's as simple as I can make it.
All right, and Shai, for you said about a third of your portfolio was reporting this week. How are you doing overall? How you feeling?
Amazing. I actually, it's 8 of the 11.
No hesitation.
No, because I made an analysis yesterday to my subscribers. Like 8 of my 11 names reported this week. They've had stellar reports. The 3 that haven't, Tesla, I don't expect to. It's not the same company. Navitas, it's a 2027 story. So yeah, I think it's a great earnings week, and I think that we haven't touched on this, but Datadog reported strong numbers this morning. That's a precursor to what Snowflake and Mongo will probably do. Consumption is back, baby, and business spending. So I'm good mood. Clearly, you guys can see that. So
all right, man.
It's good times.
Hey, congrats. Everyone, thank you so much for tuning in with us this week. Of course, we are live 9 a.m. Eastern, Monday to Thursday. And we hope you'll join us again next time. Evan, see you next time. Shai, good to see you. And I hope everyone has a nice weekend.
See ya. Thanks a lot.